Are we going to see a rate cut in the next 12 months? This guy might help. Maybe, we'll see. Today, we're going to be talking about interest rates and some other hot topics here in Australia's market. And I've got Nevada from Cube Home Loans with me. Interest rates are a pretty hot topic at the moment. I talk about interest rates every month or two on the channel just to keep up to date with what's going on in the market. I guess it's a good starting point. What's happening in terms of the big banks and interest rates in the fixed rate market versus the variable rate market? And then you and I can have a bit of a speculative chat around where interest rates might be heading.
Yeah, it's definitely a question I get asked all the time around interest rates. And the reality is not one person has a crystal ball, but there's things we can look at, I guess, to make an assessment, or indicators that we can look at. One of those indicators is the banks. A lot of major banks, banks across the board have started reducing their fixed rates.
I know there's been a bit of advertising out there going, come over to us for 3 or 4 years and we'll give you what, 5.99%?
Yeah, I think one of the more competitive ones is 3 years at 5.69. The rates can change at any time, but that's sort of been the recent changes. The 2 and 3 years in particular is where the major reductions have recently occurred.
And so the banks are always, Macquarie in that example at 5.69 or NAB, and I know a lot of the banks will chase each other in terms of rates, because so many customers are focused on the interest rate on their own home or their investment, which is important. You want to be on top of your repayments, especially if people have gone from 1.99% a few years ago to 6%, 3x the amount of interest you're paying. So where does this indicate? If the banks are saying 6% is going to be their interest rate they're charging, and there's roughly a 2% premium from the RBA's cash rate, so that's like 4% estimated rate. That means most of the banks are going to say that the RBA will be getting down to 4% or lower in the next few years. Is that what you're seeing in terms of groundswell from lenders? What are the lenders saying on their side in terms of interest rates?
Yeah, well, the fixed rates would be an indicator of that. There's some predictions on the sort of counter of that as well. So that's why it's making it interesting at the moment. There's sort of thoughts going either way.
Rates could go up because the RBA is going to make a decision soon. This video will probably be out after they make their next call, but the decisions take time, and Australia's economy is going in two directions. There's a lot of hurt out there. There's a lot of cost of living issues. There's a lot of higher interest rates for people, but also there's a lot of money out there. There's a lot of businesses doing well. There's a lot of people going on extravagant holidays, spending a lot of money. I know the baby boomers get a rap for spending the inheritance, as they say. So it's kind of a two-speed economy at the moment. So that's why interest rates are a bit up in the air.
And when it comes to making your own decisions about fixing or staying variable, really it's a risk either way. It's about managing that risk and then deciding, I guess, what your preference is. Do you want the reduced flexibility with the fixed rate, but then the certainty? And you could be in a situation where you're fixed in here and then everyone else ends up down here.
I think it's important, like my background as an accountant, it's important to run your numbers, because so many people will be hoping and wanting rates to drop. By all means, of course, you want to pay less to the banks. Who doesn't want to pay less interest, right? But on the flip side, make sure you're running your numbers out 2, 3, 4 years with buffers, like the banks put buffers on you. If you're paying 6 or 7% at the moment, can you afford 8, 9, 10%? I think I run my calculators at 10%. And we don't really break in terms of calculations at until 15%. At 15%, I'd be feeling a lot of hurt. But it's important to stress test your own portfolio, look at what might happen in terms of interest rates, and then go from there. The other interesting side is probably prices. Interest rates is one side of the equation. But prices haven't really slowed down month to month. And you guys are obviously seeing the lending side of that. What is the appetite for banks to want to lend money? Are they still, are banks still in business in terms of wanting to lend to the everyday Australian at the moment?
Yeah, absolutely. Having very little issues with valuations on properties. A lot of people that have purchased off the plan are actually having to contribute less cash. Because by the time that the development's completed, it's valuing so much higher than what their purchase price was. So that's been interesting.
The COVID contracts they've been able to sign.
Correct.
The markets continue to increase. And Brisbane's been going up 1% a month at the moment. So you're looking at 12% growth a year, which is really strong growth we've had the last few years. So it's interesting that the banks are keeping up with that and being willing to lend.
So we're having very little issues with valuations. To be honest, a lot of valuations are desktop valuations now. There's enough activity that there's enough comparable sales in there.
Got a lot of sales going through.
So the bank has enough data that they're comfortable actually not sending a valuer out, which is interesting. So that side, has been pretty comfortable and steady as far as lending goes.
I mean, Emily and I have made 2 purchases this year using this guy in the team at Cube Home Loans. And the beauty of that was Nevada and I were able to have a chat and go, okay, I'm not on the best interest rates, let's be honest. I'm on 7.74 for one of my loans, and some of the others are going to be around that low 7s, and some of our loans are high 6s and then low 6s. So we probably average around 6.97% across all our loans. And so the important thing for me is, yes, interest rates are important, but greater than that, it's working with a broker that understands our goals and goes, okay, mate, are you worried if you pay 7.8% interest rate? And I go, well, if it's only for $500,000 and the rest of my portfolio, I've got another 3.5 million of other debt that I'm comfortable with, and the numbers stack up on that weighted average interest rate. Yeah. That's where working with a broker that can give you that holistic picture and go, what does your total portfolio look like? What do your numbers look like? You can give that perspective.
Yeah, and property investors I see generally go through periods where there's an objective of acquiring and accumulating property, and that's where you might be using some second-tier lenders, pay slightly higher rates for a period of time. And then there might be a phase of, let's look at the portfolio and see where we can reduce rates and sort of move them to more competitive options. So different stages. So, you know, like we mentioned earlier, some of those higher rates you're on, you're likely not going to stay there for a period of 30 years. Use them to acquire the property, and then when the time comes that it's time to move, then you move for a better rate.
The idea is that you're not building a property portfolio forever. Yeah. You need to go through the process of having a chat with a broker and building out the asset base to give yourself that exposure. Like, my original goal with our portfolio was 2.5 mil. We were going to get to 2.5 mil, then that turned into 3.5 mil, then it turned into 5 mil, and now it's at 7.5 with the goal to get to 10 mil. But I can't keep building forever. Like, if we keep building, you'll keep taking on more debt, which is fine if you can service it. But at some point, you want to have a strategy to start consolidating. And so if the broker can get you into the right product at the right time to give yourself that market exposure, we can help you acquire the asset, a purpose property, and buy the right property for the right price in the right location. But without the money, you're not buying a thing. So it's important to work with a broker that can see that bigger picture and go, okay, mate, well, we'll look at the full view for you. It's okay if you're paying a slightly higher interest rate as long as you're happy with that risk. And that's where Emily and I have been able to make that decision ourselves and go, okay, we're okay with taking a bit more risk here, but it actually balances out in the scheme of things for our portfolio.
Yeah, it's taking that holistic view, long-term view. Obviously, people are buying investment properties to create wealth over a long period of time. So you have
hopefully you're not making a 1 to 3 year decision while you're doing it. Yeah.
So it's about, you know, factoring in the rate is one part of that equation. You certainly want to factor it in, but it's just one component of the big picture.
Well, if you are looking for a mortgage broker to help you in your journey, where can they go?
Reach out with the details below. We're open to have a chat. Even if you're not ready to make a purchase or refinance right away, if you just have some questions, we're open to having a chat.
Awesome. And if you're looking to buy a property in Southeast Queensland, you can head over to purposeproperty.com.au to book in a free chat with myself. So if you want to build yourself a team, you can buy a property with me in Southeast Queensland. You can head over to Nevada's team at Cube Home Loans. Those guys help anywhere across Australia. So that's the beauty of working with a broker. You can be borderless. Unfortunately, my team just buy in Southeast Queensland because we're physically looking at those homes, so we're boots on the ground. But if you need help from either of us, reach out and we'll go from there, and we can take a look at your interest rates and see how you can get a better deal and maybe buy some more property. So we'll see you soon.
Thank you.